So I recently received a question from a subscriber saying, "Hey Ian, I started out with dividend investing and I'm getting a little bit discouraged here. I purchased some dividend stocks and it seems like they're not going anywhere. Meanwhile, all of these FANG, the FANG stocks, these high-tech stocks, these growth stocks, they seem to be skyrocketing." And so today's video, I actually want to share some examples from my personal portfolio. I'm actually going to disclose yet another holding from my personal stock portfolio that I own. And these are some random stocks I just picked. And I want to share how it is possible actually not only to receive dividends and cash flow with dividend growth investing, but also to receive massive capital appreciation. And I think this is the secret of dividend growth investing. Look, I don't invest for capital appreciation, I invest for dividends. That being said, one of the fun byproducts of dividend stocks is it is possible to receive capital appreciation from dividend stocks. So let's get started. So welcome to the video, everyone. By the way, I'm in Carmel right now enjoying some fun time with the family, nice family vacation, but I wanted to make sure to get another video live, and so PPC Ian, the videos are always coming about dividend growth investing, personal finance, investing, stock market. So let's get started. Basically, I want to share 3 examples from today. If you've been following my channel, you know in my recent video about Caterpillar, I'll link in the description below. I purchased Caterpillar in 2015 for $65 per share. This wasn't the first time I purchased Caterpillar, but I averaged down at $65 per share. In 2018, it hit $139 per share. That is capital appreciation of 114%. So right here, Caterpillar, is that a high-tech stock? Is that a FANG stock? Is that a technology stock? No, it is a classical dividend stock. But the fact of the matter is, even with a classical dividend stock, it is possible to see massive capital appreciation. Now, the cool thing about Caterpillar, in addition to the capital appreciation, is that I am receiving a 5.2% yield on cost. Meaning I take the current dividend amount, I divide by my purchase price, and that's my personal yield on cost at 5.2%. The reason it's so high is Caterpillar tends to increase the dividend each and every year. Another one, I want to share this because this is a stock I've never shared before. I will do a full video analysis on this one sometime soon, but I wanted to make sure to do use this as an example because I received so many questions. So many questions about this particular stock, and that stock is Home Depot. It's funny, I get these questions, Ian, do you own this? Do you own that? I bet you can guess a lot of them, and Home Depot is one of those fun ones where, of course I own Home Depot. It's one of the growth stocks in my portfolio, dividend growth stocks, that is, that I like so much. And here's a fun example. Home Depot, I started late. Boy, I started purchasing this in 2014. I purchased at $75 per share. Guess where it is right now in 2018? It's at $200.77. My capital appreciation on Home Depot is a huge 168%, and my yield on cost is 5.5%. This is yet another example. By the way, I will do a full separate video on Home Depot. I look forward to that, sharing my experience at the company. I'm probably not, I know I'm not averaging in more now. I probably won't do any more averaging into Home Depot in 2018 just because it's run up a lot. I like to buy value. I like to buy stocks when they're on sale. I don't see it as being a sale right now for Home Depot or Caterpillar. That being said, I am reinvesting the dividends. And these are 2 examples so far just of the possibility of receiving huge capital appreciation with dividends. And again, Home Depot, is that a tech stock? Is that a FANG stock? No, that is a traditional retail company. They've embraced technology. They've done a good job embracing technology with their website, and I know their internet sales are growing really quickly. But that is a traditional stock, dividend stock, that has had huge capital appreciation. So again, my thought to everyone out there getting discouraged with dividend investing is, look, it may take some time. All of the gains don't come overnight, but at some point, at least what I've experienced with a lot of the dividend stocks I own, is the capital appreciation starts coming sooner or later. And look, I don't invest for capital appreciation, but it comes sooner or later. Another one, this is a fun one, Altria. I own this company, Altria, ticker MO. First bought in 2009 for about $16 per share. As of 2018, it's at $58.52 per share. I'm up 266% on Altria. Huge capital appreciation on that. But this one is a little unique. Their dividend when I first started buying was already really high, and they've grown it really quickly. Even recently, they did another dividend bump, and this is the first stock in my portfolio now where I'm yielding 20% yield on cost. That's right. If I take the current dividend amount per share, I divide by my purchase share price, which was $16 back in the day in 2009, I am yielding 20% on cost. To put this in perspective, the historical returns of the S&P 500 every year dating back in time are about plus or minus 11%. I am now locking in a 20% cash flow, dividend cash flow, passive income yield on cost with Altria every year and growing, which is almost double the historical returns of the S&P 500 on cash flow alone. And that doesn't include the 266% capital appreciation I have already enjoyed. So 3 examples here, all stocks that I own, all have done really well from a dividend growth standpoint, cash flow standpoint, but also a capital appreciation standpoint. But look, I'm not buying these now. These are not stocks I'm buying in 2018. One could argue Altria is a good value here or not. Out of the 3, certainly I think it is a reasonable value. I'm not adding more just because my position in Altria has reached a size where I'm comfortable with it. I don't want it to be too much bigger. Now, what am I buying in 2018? I am buying different stocks. As I've done in some of my recent videos, I'll link in the description below. I recently purchased Cedar Fair, ticker symbol FUN, and IBM, ticker symbol IBM. And I've been owning IBM for years now, but I've been averaging in more. And the thing about these 2 stocks is I'm buying when they've dropped. These are 2 stocks that have dropped. They've languished. They're not doing really well right now. Yeah, it's possible to get discouraged, but at some point, my belief is they will turn around. They will start going up again. They will start ascending. And so what I have found with dividend investing or with investing in general is it requires patience. The gains, the capital appreciation, it doesn't come overnight. And look, I don't invest for capital appreciation, but it's surely nice to see capital appreciation because it's a byproduct of a well-run company. But what I've learned is the capital appreciation, it surely doesn't come overnight. And when I buy, I like to buy when stocks are on sale. And when stocks are on sale, sometimes it's difficult. Sometimes I buy when they've already come down, and then they go down more. Caterpillar is the perfect example. I started buying, I'll link in the description below, in the 80s. It dropped down to 65, I bought more. And someone even commented here, hey Ian, on my IBM video, are you a professional falling knife catcher? This is a stock market term when a stock is just tanking and it has no sign of reversal in sight. That's what one of the commentators thought IBM was all about. And so, you know, maybe I am. I like to buy when stocks are going down. Sometimes they go down more. When they do, I'll average down. Someone was asking me about my averaging down strategy. I'll share that in a future video. But the fact of the matter is, when I buy, typically these stocks are not going up. Sometimes they are. But the fact of the matter is it's difficult at times. And yeah, it's difficult when I buy IBM or Cedar Fair and I see everything else going up. But I know that I'm buying into value. And that's kind of the mark, in my opinion, of a really savvy investor, is someone who finds value, is convicted in the value, buys it, stays true to it, averages down if it goes down more, doesn't worry what's happening in the overall market, and then long term, the rewards tend to emerge, both in capital appreciation and dividend growth. And again, I don't really look at capital appreciation closely, but I know most people do, so I wanted to cover it in today's video. And obviously it's the mark of a really well-run company. Well-run companies tend to have some capital appreciation. And so it requires patience, it requires persistence. And here's one closing thought. Historically, in the last few years, growth stocks have done really well, especially the FANG stocks. But if you look back to the beginning of the stock market, to the early days of the stock market, typically value has actually done better than growth. And I'll link in the description below to a Bank of America Merrill Lynch study that proves this, or at least that's one study that proves that point. And so it's debatable over the long term. Will growth do better? Value do better? A lot of people think growth is better right now. But I am here to say that for myself, I certainly believe that value, I see the value, I feel more comfortable with the value, I invest for dividends and cash flow, and quite frankly, I believe that my portfolio over the long term has the opportunity to trump value, to trump growth, to do better than growth. Surely in the short term, it's been tough. There's been a lot of the FANG stocks have just been going hockey sticking up, but I don't know if that will continue forever. And so I invest for value, and my value picks have done really well. So before I leave today, just a friendly disclosure, I am long. I own the stocks mentioned today. I own stocks in Altria, ticker symbol MO, Caterpillar, ticker symbol CAT, Home Depot, ticker symbol HD, IBM, ticker symbol IBM, and Cedar Fair, ticker symbol FUN. I own all of those stocks in my personal stock portfolio. Also, before I leave today, a friendly disclaimer, this is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. So I'm starting to sweat out here. This is a hot day in Carmel, so I'm going to make it a short video, get back to the family, enjoy some family time, some vacation time. But I wanted to make sure to keep my schedule up here on PPCE, and so I know you guys appreciate the longer videos, but some of them have to be shorter too because they're just shorter topics. And so hopefully today's video just gave some insight that, yeah, it's possible to have huge capital appreciation with value investing, dividend investing. Maybe it doesn't come as quickly with some of the growth stocks that we've seen lately, but it is surely there. And look, I buy when stocks are going down. Eventually they turn around, they go back up, and that's how I unlock a lot of value with my dividend investing strategy. Thank you for being here. If you enjoyed the video, I invite you to comment below, to like, to subscribe. All of that means the world to me. I will see you in the next dividend investing video.